Hello and welcome to this Fortnightly Market Outlook webinar. I'm Devarsh. I'm Deputy Head for Research for Retail Research at HDFC Securities. And I'm joined by my two colleagues, Vinay and Ajit. Good morning, Vijay. Vijay. Sorry.
Yeah, good morning, Devarsh, and welcome to the webinar.
Right. How are you, Ajit?
Yeah, good morning, sir. I'm fine. Welcome to the Fortnightly webinar.
Right. So let's straight away jump into the content. My screen is visible, right? With Ajit or Vinay, can you please confirm my screen is visible?
Yes, visible.
Okay.
Yeah.
Okay.
Yes.
Yeah, let's start. So let's look at the key developments first. The stock market in US surged because of the strong data. The inflation, headline CPI inflation, which was at 9% about 12 months back, gradually it has come down and it has come down to 3% now. So now, once the inflation is down to 3%, it is expected that the US Fed will stop raising the interest rates after this meeting. So it is already decided, more or less confirmed, that they will have to increase the interest rate in July month because they've already telegraphed that expectation across the world, and US Fed usually do not surprise the market. But after that, the possibility of interest rate hikes have reduced. Now, if interest rate doesn't rise, it has positive and negative implications for stock markets across the world. And during the course of this webinar, I will try to explain that. But first, let's look at what has happened over the last fortnight and last 1 month in major global markets. So first, the US markets have done well over the last 1 month. They are up about 3.5% to 3%. And other like Germany's market and Chinese markets are more or less flat, while DAX to Germany and the UK market, Japan markets have corrected a little bit. Many markets, the European markets are still strong if you look at the data from the fortnight perspective, while American markets are still strong. Compared to these markets, our markets have relatively done well. We are up about 4 and 4.5% over the last 1 month, and mid cap and small cap has outperformed. Mid cap is up by 5% and small cap is up by 6.6% over the last 1 month. And what has been the sectors which are rising? So IT and technology has surprised. Lot of short covering post TCS is positive commentary has come in, and because of that, IT sector has done well. Oil and gas is the second sector which has done relatively well. Our first target of CNX IT ETF report, which we released about 2 months back, has achieved. So now we have released 2 reports by Ajit on IT and banking, and 2 reports by Vinay, 2 colleagues which are there on this webinar. They have released 4 ETF reports and all 4 are doing well. The gold one which have recently released, before that pharma was also released. So gold, pharma, IT and banking, 4 ETF reports have been released, 4 index ideas have been shared, apart from more than 65 ideas in technical and fundamental side. Those ideas I will discuss in the end. So flows have been positive, as we can see. FIs have become net buyers across the board. Aggressively from June, their number has started becoming positive. Gradually for the trailing 12 months, they came into positive, and now they have bought huge about 25 billion dollars worth of Indian rupees over the last Indian stock over the last 1 year. Lot of important events are scheduled over the last couple of days of this trading session of this month. In 17th of July, we will have a holiday in Japan. 20th of July, the interest rate meeting of China is there. On 26th of July, we will see the FOMC increasing the interest rate, and this will have implications on ECB's rate decision and Bank of Japan rate decision on 27th and 28th of July. So these 3 dates are very important, which is at the end of this month. So these are the important events which are scheduled. Now I'd like to hand it over to Vinay, who will share his views from the technical perspective. Over to you, Vinay.
Yeah, thanks, Devarsh. 1 minute. Yeah, so good morning friends and welcome to this webinar. Now I'll take you through the technical developments on Indian markets and important levels for Nifty and Bank Nifty. So let us start with the slides. So this is a Nifty daily chart, and on Friday we saw that Nifty broke out from the crucial range which was there for last 7-8 session. 19,500 was acting as a strong resistance. So here you can see this consolidation was there and 19,500 was not taking out. So Friday we saw that Nifty decisively closed above 19,500 over here. So it is a breakout from the consolidation, and primary trend of the Nifty is already positive, and Nifty has not been breaching its 5 days exponential moving average, which is the nearest moving average. So on all time frames Nifty is bullish, and 5 days exponential moving average is currently placed at 19,447. So this has become a strong support for the short term. So those who are 1 or 2 days traders can track this level for the stop loss in the Nifty. So 19,447 is a very strong support, and Nifty has broken out from the range. So obviously we can expect some upside from here also. So this is all-time high for the Nifty. Bank Nifty already registered all-time high a couple of weeks back, and we are into continuation of an overall uptrend. Now let us move to the weekly time frame. What are the important support levels for the Nifty? So this is a Nifty weekly chart. If we adjoin the trend line from the weekly top of October 2021 and December 2022, the breakout was seen at 19,000 level on the weekly chart. So it is a clear-cut breakout, and after that we have seen a follow-up buying coming in. So this trend line gives a strong support around 19,000 to 19,100. So positional support for the Nifty is placed at 19,000 to 19,100, and unless and until we see this level breaking on the downside, trend of the Nifty will remain bullish. So we are into continuation of a bullish trend. We can see here bullish MACD, RSI indicators and oscillators are also showing bullish trend for the Nifty. So this is the positional supports we need to keep in mind, and overall trend means positive for the Nifty. Now the overall, what is the potential target for the Nifty in the current rally? So what we see is 20,055 is an important level to watch out for from here. If we apply the Fibonacci extension levels considering the previous swings, what we saw in June 2022, the bottom was 15,200. Then again we saw all-time high at 18,887. And in March 2023, we saw that 16,828 acted as a strong reversal level. So if we consider this entire swing, Fibonacci extension levels are giving a potential target at 20,055 for the Nifty, which happens to be the 78.6% extension level. So according to us, positionally, if we were to take a 2 to 3 months view, this can act as a next resistance or next target for the Nifty. So overall, Nifty is into a blue sky territory, and continuously it is rising, and 500-600 points has just now become 2 to 3% movement for the Nifty. So next level for Nifty is seen at 20,055. Now let us come to the Bank Nifty. So this is a Bank Nifty daily chart. We saw that a couple of weeks back, Bank Nifty hit an all-time high at 45,655, and after that it showed underperformance. So last week Bank Nifty underperformed the Nifty with a good margin, and on Friday what we saw is in last 45 minutes Bank Nifty bounced back sharply. So this was the low. The 44,500 was a crucial support, which is derived from the 30-minute top. So previous top was 44,500, and on Friday we saw that Bank Nifty made a low around that level only and bounced back sharply. So 20 days exponential moving average is also placed around 44,500. So for the short-term traders, Bank Nifty has got strong support at 44,500. So this can be kept as a stop loss, and one can remain long with a stop loss of 44,500. So now what is the potential target for the Bank Nifty? Let us come to that. So recent top was 45,700 around odd level, which was a 50% extension level. So the nearest, the immediate target for the Bank Nifty comes in at 45,700, and if that is taken out, we can even expect a target of 47,390. This is a positional target. We need to keep it on conditional basis. If Bank Nifty crosses 45,700, then we can expect a target of 47,390, which is a 61.8% extension level on the positional charts of the Bank Nifty. So guys, Bank Nifty has already underperformed in the last week, so catch up rally could be there in the next week. So overall trend of the bank nifty is bullish, so we can keep it with a stop loss of 44,500 in bank nifty spot level. Now let us conclude. So overall Indian markets are into a continuation of an uptrend. Nifty has broken out from the narrow range of 19,300 to 19,500 on the upside, which is a good sign. Immediate support for the Nifty is at 5 days exponential moving average, which is placed at 19,445. Positional support for the Nifty is seen at 19,000 to 19,100, which I showed through the trend line on the weekly chart. So is a positional support. Positional target for the Nifty seen at 20,055, derived from the Fibonacci extension. Immediate support for the bank nifty seen at 44,300 to 44,500. So this is the range one should track, and this needs to be kept as a stop loss for the bank nifty long position as far as trading is concerned. Positional targets for the bank nifty are seen at 45,700, and once that is taken out, we can expect a target of 47,390. Nifty IT index has broken out on the medium term charts. So IT has underperformed significantly in last couple of months, and still Nifty IT index is down by 22% from its all-time high. So there is a good potential that it could extend its rally from here as well. So IT index has given a fresh breakout. Breadth of the market is very strong, as percentage of stocks about 200 DMA are at 79% for NSE 500. So it's a good sign. Breadth is going strong. It is still not overbought. In 2021 we saw that this number was reached above 95 also. So 79% of the stocks are trading above their 200 days moving average, which is a long-term moving average, and this is a healthy sign for the overall bullish market. Positionally, small cap index looks good. BSE small cap index is already trading its all-time high, while a Nifty small cap index is 6% away from its all-time high. So looking at the chart, it looks like that it is good to go from here as well. 7 to 8% upside could be there in the small cap. And however, we cannot rule out the small correction, running correction, which could come at regular interval. MSCI World Indices. So US market and Europe markets have resumed their uptrend, and they are giving support to the equity markets, Indian equity market as well. So dollar index has been falling, which is a good sign for the equity market as well as bullions as a commodity. So overall, this falling dollar is also supporting the strength in the equity market in India as well as the global markets. So this is our view from the technical side. And now over to you, Devarsh bhai.
Okay, let's hear from Ajit now. Ajit, over to you for derivatives. Ajit?
Yes, sir. Yeah, good morning, everyone. So, is my screen visible?
Yes, Ajit, go ahead.
Yes. So we have seen long build-up in the Nifty futures, where open interest has risen by 4%, and open interest has risen by 4%, and we have seen also short covering in the bank Nifty futures on Friday. So that is a good indication that market is going to bounce back from the crucial support level. So the going forward, our levels to watch for is 19,400 and 19,300. This is for the short-term trader. And on the higher side, we have to look for 19,800. That is a crucial resistance, because major open interest has built up in those areas. So once we breach any of those level, we can see higher momentum in the Nifty. But as of now, in all time frames, Nifty is looking bullish. So we will look for 19,300 level as a good support zone, and 19,800 level as a good resistance zone. So outlook is put writing is happened at 19,400 level and 19,300 level. Also, short covering has been done by FIs on Friday in both index future as well as in stock future segment. So that is a good indication. So we feel that we should remain bullish with a stop loss of 19,300 level, and for the higher target of 19,800 level. So we have seen that Nifty has been consecutively going up. So there is possibility of correction. If that correction comes, and if it closes below 19,300 level, then Nifty could test 19,100 to 19,000 level. This is for the medium term support. So if this support is very crucial, and we can create a good long position at this level. And if market crosses 19,800 level, then the next level to look up for is 20,100 level. In case of bank Nifty, we have to keep a stop loss of 44,300 level, because in bank Nifty also we have seen a good short covering in last 1 hour. and put writing is seen at 44,500 level to 44,300 level. On the higher side, we can expect 46,000 to 46,500 level, where nice open interest has been developed. So that level is going to be a crucial resistance for us in coming weeks. And if we look at the sector OI data, CNX, IT, auto, and capital goods, these segments here, auto, and here we can see the capital goods and also the IT. They have seen long build up, and this sector can contribute in for the market in coming weeks. Yes, so that's it from my side. Thank you.
Thank you, Ajit. So let's conclude. So interest rates are going to go up as I've explained. Dollar is weak, foreign flows are up, and the valuation are rising. So as we saw, we are in the bull market, and earlier it started with this skepticism, then optimism, and eventually we will go into euphoria. Right now we are near the thrill, the euphoria. There is still some room to go, but so as Vinay and Ajit pointed out, about 20,000 to 20,500 kind of level, we will have the ultimate euphoria. So as in the beginning of the rally, at the end of the March, we said that the pullback rally is on the cards. Then we said that the markets are headed faster, higher, stronger, and all markets around the world is likely to go up stronger together. Then in early May, we said that the make hay while sun shines, go aggressively long, go long on mid cap, small caps. Beginning of the last fortnight, about 15 days back on 1st of July, we said that the let it continue, let this rally continue, do not be aggressive, but over the next couple of webinars we will become cautious. So still market has still some room to go. We are near this 19,500 level, still 19,800, 20,000 levels are possible. So abhi to jaisa chal raha hai aisa chalne denge, but next time we will be little worried about these markets. So how not only the levels and the opportunity, we are also coming out with recommendations. Recently, Mastek and MHARL have been booked. Before that, Varroc, IDBI, and whole host of 60 BNPL recommendations have achieved targets since last couple of months. Apart from Mastek and MHARL, fundamental side, almost 68 stocks have achieved their targets. These are the recent ones. All these are available in our weekly file, which we will going to release on Monday. So the opportunities are there. We will be coming out with new recommendations on fundamental and on MTF side on Monday. So opportunity is there to make money. Right now we are in the fag end, so don't be very aggressive. Gradually let it, whatever is the exposure, let the exposure run, but don't get carried away. Eventually we are entering the last phase of many of these, especially in the US market. As I've explained here, let me show that chart again. What is happening is that from beginning of the October month, the US markets have gone up by 25%. The valuation in US market has gone up by 22%, while the earnings are little down. So there the expansion has happened. There the interest rates are near peak, and once the interest rates peaks out, dollar will come out of the US markets into emerging markets. So the implication is that we are expecting that the last blowout phase of rally in US, and then US markets will correct. When US market corrects in the first phase, across the world markets will correct, but eventually our markets will recover faster, and our rupee will strengthen afterwards as dollar will come from global markets into emerging markets like India. So around 20,000, 20,500, between that we will have some kind of a pause. At that time we will have to reassess the situation, reduce the exposure into the rally, and then afterwards, once the correction comes, we will again become aggressive like what we had been at the end of the March. But right now, increase the keep the exposure at it, keep churning. Whenever you have one stock which is hitting profits, you can go to the another one. So that's it what we wanted to cover in this webinar. Now we will have some time. We have 2 minutes for some question and answer. So if you have any questions, I encourage you to put it in the chat window. depending upon the screen you are using, you will have one question mark symbol. You can use it to show the share your questions. We'll wait for a couple of minutes for the question queue to assemble. Meanwhile, let me ask one question each to Ajit and Vinay. So Vinay, any particular sector which is looking extremely strong on technical charts?
Yeah, so as we have discussed, Nifty IT index has broken out on the weekly charts as well as on the monthly chart. Yesterday, Friday's move was significant, and as I said, that Nifty IT index is still down by 22% from its all-time high. So there is a good potential, and companies are coming out with good results and guidance. So I believe that technically there is a good, healthy upside from here. So positionally, I'm expecting IT index to do well from the short term for the short term. And previously we covered pharma index, which has already achieved our first target, but I still believe that there is a still upside from here. So pharma and IT should be on radar. So these two sectors can do well in the coming time, looking at the technicals.
So looking at the IT, you have recently released one MTF BNPL recommendation on Sonata. So those who are looking to add their book at declines in the entry levels, you can look at Sonata. Okay. I'm looking at the different questions. So Mukesh Shuni is asked about individual questions on stocks like we don't encourage you to put questions on individual stock or individual position in this webinar. For that, you can always use the other mediums. Sectoral earnings on view on sectoral earnings, Arun is asking. So Arun, banking is the one which can lead the earnings. So result season is on right now. IT companies usually the first one to come out with the results, and those companies have a surprise on the little bit on the upside with their commentary, not the numbers. The future as next quarter can be good for them. So that's why IT and banking are the two sectors which we will have. We will keep an eye. We have a bull run on horizon now. So we already had a huge bull run, Anuj, and so every bull run has many phases. So from the March end, we already had quite a bit of good uptrend. Now around 20,000 to between 25,000, 20,500. I'm sorry, 19,800 to 20,500. We are expecting some kind of a intermediate peak. This is the last phase of rally where we are expecting euphoria. We are expecting a lot of momentum. Mid cap, small cap has started performing quite well. So then there should be some pause, but eventually the longer term bull market is there and it can continue. One more leg of correction can come during the after the correction. We will expect another rally going into the general election, and then in general election before that people may reduce the position. So bull market is on and there is no sign that it is letting down us. IT, there are larger IT companies are retrenching. Mr. Professor Shiv Kumar Vepur is asking. So because of the large IT companies are retrenching and reducing their budgets, there was an impact on Indian companies, but Indian companies have a good order book as demonstrated by TCS, and that's why we expect IT company to recover in future. Sachin is asking, Sachin Olmuke, Mr. Sachin is asking, how we can predict FI outflows. So we are not expecting any outflows. In fact, in the second half, we are expecting. So if you have been following us during the February, March, I predicted that we should get good flows in the month of July, August, September, and that's what it is happening. We are expecting flows to continue to remain strong. We expect dollar index to weaken, and when dollar weakens, we expect money to come into emerging markets. So we don't expect large outflows out of India. Hemant, we are not going to answer any question on individual stocks, so I won't be able to answer. IT stock, Naveen Kumar is asking, yes, we have asked people to look at Sonata as a BNPL. So Sonata, we have already released. Any recommendation which has been released by us, we can always discuss about that. Real estate, Pradeep Guraud is asking, I'm sorry if I pronounce the name incorrectly. Mr. Pradeep is asking about real estate sector. Real estate is a larger cycle. It's usually a 6 to 7 year cycle. We are into that cycle for only 1.5 years, 2 years. This cycle is likely to last for long. Many companies have already discounted some of the flows, but still we expect real estate sector to do well. Srinivas Kulkarni is asking, many stocks like Maithon and CBSL hits the limit. Yes, we have already discussed this in the last webinar. We are working internally to increase the internal limits of BNPL. Granules we have increased yesterday. So from time to time, we will keep increasing the internal limits. But that is a risk management department. We can't do much about it. We have to manage risk also internally. Reliance Future. Kaushal Bhausar is asking, so Reliance, all futures and option positions will get liquidated at the end of this day, and next day again it will start as a afresh. What happened in Piramal, same thing will happen in Reliance. So all the positions will be cut off, all the positions will be scared off, and you will be allowed to take a new position from the next day. Public sector bank, especially Vinod Kumar is asking, so yes, we were bullish on public bank from last year. Many PSU banks we have recommended. There are some open positions in PSU banks in the fundamental side also. So we continue to like that sector. What is a good time to invest? Tito Kishan Vemuri is asking, for a long-term investment, for SIP, for a disciplined investor, this is as good as any time to invest. For a individual investors, long-term investors, we should not try to time the market. The timing of the market is for the people who take large leverage bets on derivative side, people who take large MTF positions. Their all money is on derivative side or on MTM side, and they are taking aggressive bet. If they have 1 rupees, they are taking positions of 5 rupees, 10 rupees, 20 rupees. Timing of market is for them. If you are buying stocks from your own money, there is no worry. Good stocks will continue to perform as long as we have growth and we have bull market. All right. Any parting advice from investors, Ajit?
Come again, sir.
Yeah, so do you want to share anything in the closing comments?
Yes, the market are well placed and we are inching higher. So one should take an good opportunity. Sector stock specific rally will be there. So one can definitely invest on our MTF recommendation. Yes.
MTF and fundamental recommendations are there for you to take benefit. Okay. All right. Thank you all for joining. This concludes our webinar. This will be available on YouTube also. So for all those who have missed or you want to share this link, go to HDFC Securities YouTube channel and share this link with your colleagues and your team members and other customers. Thank you all for joining. Thank you, Ajit. Thank you, Vinay.
Thank you, everyone.